with Apple and Facebook, both up about the same after hours on quarterly beats. Josh Lipton's on Facebook, Apple, Julia Borson's on Facebook. We start with you, Josh.
Yes, just besides the bottom and the top, a few metrics I would call out. iPhone revenue better than expected at $33.4 billion. Revenue was down 9%, though remember that's a sequential improvement. Q3 it was down 12%. iPad revenue, Mac revenue a bit lighter than expected, but wearables, home and accessories better than expected at $6.5 billion, and services revenue up 18%, also better than expected at $12.51 billion. And that all-important Q1 forecast there, Mel, Apple is guiding between $85.5 and $89.5 billion at the high end. The street was at $87 billion. One of the metric I would just call out, Greater China revenue down 2%. Remember that, though, again, a sequential improvement. In Q3, it was down about 4%. I did have the chance to catch up with CEO Tim Cook. We talked about another number of trends and themes. One was about the competition in video streaming. Obviously, Apple TV Plus launching on Friday. We now know that HBO Max, though, is going to launch at $15. Apple TV Plus at $5. I asked Cook, is that hard and fast? Is that going to shift? Could that $5 rise? Cook telling me, $5 is where we are starting at, but we will see what the future holds. I don't want to lock ourselves into one side or the other. We also did talk about supply of some of those new products. Do you have enough supply, does he think, to meet demand? Cook telling me we are manufacturing the absolute most AirPods we can during the quarter, but it may not be enough. We won't really know until the Black Friday and days thereafter. That is a worry of mine, though Cook emphasizing he believes that's a good worry to have. Melissa, back to you.
All right, Josh, thank you so much. Josh Lipton in Cupertino. Shares of Facebook also seeing a boost off its quarterly results. Let's get to Julia Borson with the very latest there. Julia.
Melissa, Facebook shares up nearly 2% on results that beat expectations across the board, showing strength with consumers as well as with advertisers. Now, two key metrics to show Facebook's growth. Average revenue per user, instead of dipping by a penny from Q2 as was expected, grew by 22 cents to $7, and was 22 cents better than analyst expectations at $7.26. And Facebook's most valuable market, North America and Canada, added 2 million daily active users after 2 years of stagnation. Brent Thill of Jefferies telling us he was most impressed by the 11% earnings per share beat. On the call, he'll be waiting to hear about guidance, which he says is likely to be conservative, so we'll have to see how the stock reacts to that. Aegis Capital analyst Victor Anthony telling us that Facebook once again proved it continues to capture meaningful share of ad budgets. Users continue to migrate to the platform. He says what's key for the stock now is how the company guides for both revenue and operating expense growth in 2020. Now, at just the same time as Facebook reported its earnings, Twitter CEO Jack Dorsey tweeted the announcement that Twitter will stop taking all political and issue ads. He tweeted, quote, "A political message earns reach when people decide to follow an account or retweet. Paying for reach removes that decision, forcing highly optimized and targeted political messages on people. We believe this decision should not be compromised by money." Now, this move by Twitter stands in contrast to Facebook's policy to not face check or remove political ads, which has drawn criticism. Facebook CEO Mark Zuckerberg has argued that Facebook should not limit free speech. We'll have to see if Zuckerberg weighs in on Twitter's latest move on Facebook's earnings call, which is just now getting underway. Melissa?
Julia, is a political ad considered an ad that specifically endorses one candidate or is paid by a campaign for a candidate?
Well, yeah, so that's one subset. So there are the political ads that are purchased by candidates for candidates, and then there are what's called issue ads. So this could be something that's an ad for gun control or an ad against gun control, an ad about a hot button political issue like abortion. So this has been something that both Facebook and Twitter have made a lot of changes to be very transparent about these ads, wanting to make it very clear about who's purchasing these ads. But this is a big move for Twitter to say, look, this is just not a huge piece of our revenue, and fundamentally we think it's a better thing for us not to be enabling paid political reach.
All right, Julia, thank you. Julia Borson on Facebook tonight. We got lots of trade, lots to talk about, but let's start off with Apple. Right now, the stock is up by 1.7%, so we're about a percent plus off the session highs. Guy, what do you make of this, especially as Apple just hit all-time highs yesterday?
So this is what I take away from it. The gross margins better than expected. The services gross margins significantly better than expected, 64.1% now. Services are now 20% of this quarter's revenue. That's good. Could it have been 21, 22%? Would that made me happier? I guess, but I think that's fine. I think the first quarter guide is fine. I don't think it's anything remarkable. I think the question is, has the run from 175 to 245, wherever we are, been too much too fast, and does it stall out here? I don't think it should. I think it's good enough to keep it going, but the market will be the ultimate juror.
I think Apple was, as we all know, a hardware company. Then it was a services company.
In terms of the
perception,
the bull case.
Perception. And now when you have people talking about maybe hardware is going to be better than it was once perceived to be, and then you throw in wearables on top of it, and services are up 18%, sounds to me like it's probably getting to that price target of maybe 280 or thereabouts. I've been long. I'm staying long the name.
Yeah, record revenues for services at this point.
Yeah, I mean, we're seeing the evolution happen, and it's obviously there because of the multiple, right? This was trading very much as a hardware multiple. The street has fully embraced the story of the evolution. It's now north of an S&P multiple, right? And we'll see if that trend continues. It's pretty good considering what a run the stocks had, right? The bar was not so high because people thought, all right, maybe iPhones, we're not going to see it yet. We'll see it next quarter. I'm wondering if there was any attempt to get iPhones in the channels prior to a potential of another tariff raise. I don't know. It was a pretty impressive quarter, though, and I thought the guide was pretty good. I'm long. It could trade off a little bit because expectations now are, people are saying, wow, this is great, and then you get a little bit of a frenzy, and then some disappointment. I'm long. I like the story. I like the evolution, but it is getting a little pricier.
Well, I'm long, and I stay long, and you say, it's trading at a premium. It's about a 7% premium to the S&P, which is not unprecedented for this company, but it is unprecedented in the last 10 years. In other words, and to take Steve's point, it largely has been making this transition as a hardware company, which is now a hybrid multiple, and now trading at about 18 times trailing. And if you get a dynamic here where I think people are starting to really grind into this whole services revenue, it's now $50 billion annualized services company. This is where that multiple probably needs to go a whole lot higher. And to what Guy was saying, where does it come from? Look, the stock's rallied 18% above the S&P since the last earnings period. It's outperformed the S&P by 1,800 basis points. So that's extraordinary. But what can it do? I still think the big institutional market is actually underweight this stock. And we've seen the stock go through periods where I think you can actually see outperformance. It's overbought technically right now, whatever that means. There's a lot of people that define that word differently. But if you look at relative strength indicators and if you look at where it's been, I think this stock can move higher. That Q1, that fiscal Q1 guide, I think is pretty extraordinary when you consider where expectations were.
I would have thought the sigh of relief in the after-hour session might have been a little bit greater in response to what the CFO is saying about China.
Greater China.
He's saying, China business has improved. Response to iPhones, they're very good, is his quote. And overall on track for a strong Christmas sales season. But the fear was that we were setting up much like we were 1 year ago when we had a run up in the shares and then we had a disappointing fourth quarter or disappointing guide, and that was because of China.
Right. Well, I mean, we'll see if that manifests. There's a conference call that's going to happen. We'll hear a lot of different things. But, some companies, Apple's had its ups and downs, but some seem impervious. I mean, Starbucks has made similar commentary. Nike has as well. So good for Apple. Again, the first quarter guide is extraordinary. I don't know if I'd go that far, but I think it's good. I don't think it's great. I think this quarter was good enough. The gross margin improvement, I think, is significant. And the fact, to Tim's point, now services is a $50 billion business, should give them a multiple closer to 22.
And I don't think people bought it going. I don't think people are overly bullish coming into this print. We started here.
That's my point.
We started here.
The stock is up a lot.
The stock hit all-time highs yesterday.
But it wasn't about it. We started to see people start talking about hardware as more of a tailwind or more of a surprise to the upside. But I don't think, as Tim mentioned, I don't think people got overwhelmingly long ahead of this print. I think there's people that were waiting for this print. I think this print could be the catalyst for people to say, hey, you know what? I'm going to take a stab at this because I think I have 10% upside from this point.
Right.
Let me just add one more thing. The Steve Cook talking about the AirPods and how wearables, right? Can't make enough. That's his worry. I mean, that's
pretty bullish.
Yeah, that's pretty bullish.
Well,
yeah.
Go ahead.
Services wearables were the bright spot here. I think you get to a place where I think the street is going to be scrambling to upgrade. And I think you have a case here where there's a handful of folks that have been very bullish.
Scrambling to upgrade. We have every single firm come out raising their price target, tripping over themselves.
But reaffirmation of services revenue with that margin gives people the reason to raise their price on a stock that, frankly, I think they want to raise on. And I think the institutional world is underweight.
I think this after-hour session would be very interesting in terms of the trade on this stock. Up 1.5%. Let's get to Facebook now. What do we make of this quarter? Karen, your take?
I mean, that revenue growth is that's extraordinary. I mean, this is an extraordinary business. We know that. I think in light of what Twitter is saying, this is interesting. Is this, all right, all that money, all those ads will go to Facebook? Or is it, all right, Facebook, now you're under pressure to start thinking about doing the same? That obviously would be a negative for revenue for Facebook. I mean, this is an extraordinary business. I can't tell operating expenses. They can put a whole lot of stuff in there, right? And if I were there, I wouldn't want to report an absolutely gigantic quarter when you're under such scrutiny about, you're being a monopoly. So, or a.
It is what it is, though. I mean, what are you going to do?
I think you put in operating expenses. We don't know exactly what's in there, right? You could put a lot of costs in there. But I'm still long. I think that it's an extraordinary business, not at an extraordinary price, and I'm staying long.
Guy, you know the initials. What are they?
FB.
Well, that too. I was going to say ARPU. I was going to say ARPU.
Yeah.
So people, we love ARPU.
I was happy you knew FB.
But that was pretty cool. Yes, that's the stock ticker, Guy. I think when you look at the 726 on the ARPU, this is pretty extraordinary. Karen talked about the growth. How about the
Average revenue per user?
Sorry.
Let's remind
we don't
ourselves.
talk about that every night. I thought that was ingrained in
case.
people's heads. Well, but I think the ad revenue growth year over year of 29% is just extraordinary when you consider the size of this company. And they're out there telling you, and if you look at the headlines right now, 2.8 billion users a month use one of their services on a monthly basis. 2.8 billion. And that's why when people talk about the regulatory breakup and people start to talk about some of the parts, you know that there are other businesses here that are under monetized.